Welcome back, passive income investors alike. In this video, we're doing a school trip. That's right, we're going 20 minutes north of Toronto, ladies and gentlemen, to the Canadian Precious Metal Exchange. And you're probably thinking to yourself, why am I going to a gold and silver shop? Well, I've convinced my mother to liquidate her metals, which a lot of people are like, that's not good investment advice. Well, don't worry, I'm going to break all of that down in this video. And by the end of this video, if you stick around, I'm going to show you exactly how much money we got for all of our silver and gold, maples, all that fun stuff in between. But I want to talk about gold as a little bit more of the investment side of things, guys, and why people invest in it. If you've never been to a precious metal exchange, I severely suggest if you live in like the Ontario area, come check this place out, because you don't really want to buy any of this, in my personal opinion, because they sell it way above price that you could probably get at an auction or say on eBay. But it's still an incredible place to come look at some like historical coins and things of that nature. But I want to talk about gold as an investment. And before I can talk about it as an investment, what is gold? Well, let's go all the way back in history, guys, because gold is extremely hard to make. We need to use like nuclear bombs and stuff, and it's not even close to being like money sufficient, but it's made in nature when neutron stars collide. And this is like absolutely bananas, because I can't even break down the math behind a neutron star right now, because these neutron stars are brutal. But we've actually caught this happening on the Gemini Observatory. I think this was from actually one of the satellites up in space that they had kind of circling around to get close up. But this is what makes all our heavy metals on this planet. So it's kind of an incredible process, and it's been valued through history. It's for as long as people have been writing things down. In fact, for as long as people have been making artifacts, they've been using gold because of its malleableness, its shiny color, and it doesn't rust. But I want to talk about, now that we know exactly, not that well, this is a long story obviously, but let's talk about more of the investment side, because when we talk about recessions and crashes, usually the first thing people go to as an investment is gold. So let's take a listen to a guy named Peter Schiff.
Position to know that a monetary crisis is imminent. That doesn't mean it's going to start tomorrow. Of course it could. But whether it starts next month, next year, or sometime in the next several years, they need to have gold. I mean, gold ownership is going to be key to preserving confidence in your currency. And you have to back your currency by something real, not by somebody else's paper. And so that's gold. And I think what Poland is doing is a trend that we're seeing, where it's not just that you want to own gold, but you want to own possession of your own gold. You don't want to trust a third party with your gold.
Absolutely. Well, Peter Schiff.
So, ladies and gentlemen, Peter Schiff is probably one of the biggest advocates anytime anyone mentions a crash to bring up gold. He mentions throughout his entire channel, which you're welcome to go and visit, about why you need to be buying gold, why countries are loading up on gold. And I'm going to tell you right now why I don't like it as an investment. And as I was saying, guys, if you actually go back to the first video I ever posted on my YouTube channel, I actually sold all of my gold, and I actually videoed the amount of money I got for it and everything. And what did I use to buy most of that for? I'm going to explain that too in a second, as I'm sure most of you are aware if you're sticking around as subs. But this is like a bit of a flashback and almost a celebration as we hit almost the first year of this YouTube channel. This video was posted January 2nd, 2019, just at the beginning of this year. And to hit things off, guys, I literally sold all of my gold at this exact same table. It's kind of crazy to see. This is what started my YouTube channel. But going back to the topic of gold here, guys. So let's take a quick look at gold as an investment, guys. So if you were back 20 years ago in the early 2000s, you would have been purchasing an ounce of gold for roughly $273. As of today, you will be getting a rate of return of it's kind of crazy. You'd be at $1,487, which is quite a healthy rate of return overall, guys. So if you've been holding on to gold, you've been doing substantially well. But you know where you'd be doing even better? Well, I know this is a shock to say, because the markets, ladies and gentlemen, it doesn't matter how much you compare the S&P to almost any other investment other than real estate, it tends to overperform. And gold is one of these things that we basically use to hedge ourselves against currencies and keep up with inflation. But the problem with gold, and the reason that all of you know that if you've been sticking around my awesome golden subs, you guys realize that you want cash flow. Gold is shiny. It's got to be protected. You got to store it somewhere, and you're not going to be touching it for 20 years to get this rate of return. And you have very volatile periods where you have absolutely nothing going on. For instance, if you've been investing in gold since 2010, you've had absolutely no rate of return. Whereas if you've been buying the Vanguard index back in 2010, well, you would have pretty much at this point already tripled your money, and you would have been collecting dividends that you could have spent along the way on top of that. Now, there is no way that I could ever, and I'm not even just talking about stock market here. Don't get me wrong, guys. Like when it comes to a crash, I don't think it's just the stock market that I'm paying attention to. I also invest into cash flowing businesses outside of the stock market. I think buying anything with cash flow is better than owning a rock. Warren Buffett is another big advocator against gold.
Buying something because they think it's going to go up next week or next month. And for whatever reason people give you, you should understand what you buy. Now, if you buy a farm, you look at the farm and you say, I expect to get so many bushels per acre of corn or soybeans, and you figure out how much that'll be worth, and then you figure out what the price should be. If you buy an apartment house, you look at what the rentals will be and what the taxes and expenses will be, and then you decide how much income you'll have, and you pay a fair price for that. But you don't. In stocks, people, their neighbor whispers something to them and they run out and spend money that it took them years to earn. So you always want to look at the productive ability of the asset you're buying, whether it's a farm, apartment house, or a company, but the company is represented by a stock. And if you always get your money's worth, you'll do very well.
A lot of people like Kevin O'Leary like gold because it stabilizes your portfolio and it gives it some balance to keep things on those volatile moments a little less volatile, but you lose out on the rate of return. And I'm much younger. This is coming from a millennial mindset here, ladies and gentlemen. And because I have time on my side, I would rather build up the paycheck I'm going to receive from owning companies and building businesses than I would kind of doing my best to protect a big amount of shiny metal I'm always worried about when I leave the house, because it's just something that's going to drag me behind. I want you to think of that. It's like tying a ball and chain, almost like those ball and chainers to their desks. And you got to always be worried about stuff like this. Whereas with my money invested in the markets, it's all in a bank. It's protected. It's backed by the Canadian Treasury. And on top of that, guys, I can access it anywhere in the world and collect my paychecks anywhere in the world. And by the way, it's a fun time to mention that I also purchased some dividend stocks today, guys. I actually added some money to my my RBC account. This is my newer account that I recently opened, and I bought some MO. Now, MO, if you don't know, is that jewel company. It's Altria Group. They have shares in Kronos, which, by the way, they're $700 million having in paper losses. That's right, guys, $700 million in paper losses on MO's position in Kronos Group. But the cash flows, I'm not going to get into breaking down this company. I just want to let you guys know I went ahead and purchased some more, which is going to generate me, well, it's going to pay me out roughly, if we do 19 times 3, we're looking at about almost $60, $70 there, guys. Now, $60 to $70 over a year, well, what is the price of silver cost? Let's see how much cash flow this is going to produce if we were talking about silver investing. So let's take a look here, guys. I'm on gold still. What am I looking for? We want silver. So if we go back to silver, ladies and gentlemen, well, we can take a look that we'd be getting about $17 US. So 17 US dollars a silver ounce. So what does that buy me with, roughly $60? Well, that buys me almost 4 ounces of gold. Think about that, guys. Or it's gold, silver. I wish gold, but every year this investment right here is gonna pay me 4 ounces of silver. Will silver do that for me sitting in the basement? No. When I go down there 10 years from now, it's only gonna be 4 silver bars. And on top of that, the equity in this company I expect to be worth more in the future than it is today. Which leads me into telling you guys, how much did we sell for my mom's precious metals? Well, you can take a look at the paperwork right here, guys, and we got over $5,000 for what she liquidated, which was just 2 full ounces of gold and a variety of silver. I can't remember the exact ounce amount. It's written on this paper here, though. And if you guys are ever interested in liquidating metals, well, the best places to go are the legit places. So I hope you guys enjoyed this video. Just a fun little school trip today, so stay cool, stay awesome. I look forward to chatting to y'all real soon.
When you look around for a business that you want to buy, you can't find any at attractive levels. However, when you're looking at equities, you do see that as a good place. The Berkshire has been a net purchaser of equities this year in 2018, and that's because you like the deals that you're getting in the market.
You can buy small pieces of businesses for less than you can buy whole pieces of businesses.
For the premium you'd have to pay if you were buying the whole thing.
So you get a bargain as an investor compared to what I can get in terms of buying the whole business. And people, if they just think of stocks as pieces of business, they'd be so much better off than thinking of them as little things that move around in price. And I think with Berkshire, we have an unusual number of people as shareholders who just look at Berkshire as a business. They look at it as a savings account. They put some money in 20 or 30 or 40 years ago. We retain it and reinvest for them, but we're their savings account. And that's the way I look at my own stock. That's the way Charlie looks at his stock.